Good afternoon. Welcome to the 17th Annual Colliers Idaho Outlook Conference. First and foremost, we want to thank our guests joining us remotely for the office portion of the event. We know how valuable your time is, and we appreciate you've chosen to spend that time with us. Our hope is that you leave here with a better understanding of the current commercial real estate environment in the Treasure Valley as it pertains to the world of commercial office leasing and purchasing. We want to encourage all of you to send any questions you might have via the chat feature. We'll do our best to get those questions answered by the end of the event. We'd also like to thank our sponsor, Givens Pursley. Thanks for your support in the event, and more importantly, thank you for the excellent legal service you provide to many of our clients. Last but definitely not least, we want to thank our Director of Marketing and Research, Melanie Nielsen, and her awesome team. Thanks for all your hard work in putting this event together. My name is Oliver Maron. I'm a member of Colliers' office brokerage services team. I moved to Boise from Seattle with my wife and 4 dogs just over 3 years ago. I specialize in the sale and leasing of office properties across the state of Idaho with a large focus on tenant representation. The first question we'll direct to Scott Feiner. Scott has been a leading expert in office sales for Colliers since 2008. A self-proclaimed deal junkie, Scott transacts between 50 and 60 leases and purchases a year with an emphasis on medical clients. Okay, Scott, as 2020 began, the Treasure Valley is one of the hottest commercial real estate markets in the country. Then COVID-19 hits, and now here we sit in October. Focusing on office leasing, please take us through the changes in the market. Where are we now, and how did we get here?
Thanks, Oliver, and thanks to my other panelists. First, I'd like to start out with an anecdote about kind of what's been happening throughout the year, then I'll provide a few data points. Anecdotally, the year started out strong. As you mentioned, we were one of the hottest markets in the country. Typically, I show between 3 and 4 properties a week, whether that be for my landlord clients or my tenant clients. And we were clipping right along at that pace. And I was on track to do about 40 to 50 leases. And then middle of March happened, COVID happened, March 12th. I know it well because that was the day my second daughter was born. And I did not show a single office from March 12th until about mid-May, mid to late May. And so kind of looking back and at some of the data from last year, I wanted to compare, what did happen. So what I did is I looked at some of the leases that were transacted just by the Colliers folks in the first half of 2019, and I wanted to compare that to the first half of 2020. And so Colliers as a group, we transacted 59 leases in the first half of 2019. Now, when you compare that to the first half of 2020, we did 33 leases. So it didn't come to a complete halt. We did do some transactions, but you can see that it was about half. And then I wanted to look at, okay, when did the economy, get back and running? And I'd like to, think that we started maybe in the second half of July and moving forward. So I compared July through September of 2019 through July through September of this year. And in 2019, we did 30 leases as a Colliers group in that time period. And this year we've done about 19. So it is, it has slowed down, but I am getting back to showing property 3 to 4 times a week now. And we are starting to get transactions done at a higher clip than versus the shutdown.
Thanks, Scott. That was awesome. Quick focus on the purchase side now. This question is for Lou Manglos. Lou specializes in investment sales and has been with Colliers for 15 years. Lou's a member of CCIM, SIOR, and also he's an adjunct professor at Boise State University. So Lou, same question to you, but let's focus on the office purchase market and consider both from an investment and owner-user perspective. Please take us through the changes in the market since the beginning of 2020. Where are we now and how did we get here?
Thanks, Oliver. So when the pandemic hit, we took a really hard pause on activity for a period of time beginning in early March. And then since then, things have picked up. They're certainly not to the same levels in terms of activity that they were pre-COVID. I would say pre-COVID, that was the strongest market I had seen in my 15-year career. So to get back to that level would definitely be saying something. But demand has been picking up. since that time. One of the things that's helped a lot on the demand side is interest rates have dropped yet again. And there was a period of time for, say, a month or two after the pandemic first really hit, where financing was kind of a question mark in terms of its availability, and the rates that lenders were offering for investment property hadn't come down as much as the underlying indexes might indicate they should. But I would say, especially over the last 2 to 3 months, we've seen lending options become more abundant, and certainly the interest rates offered to investors have dropped, and users, and so that has spawned more activity.
That's great. So it sounds like a common theme between leasing and purchasing, both owner, user, and investment, that COVID hit, things slowed down. As time went on, things have built themselves up and are now back to, if not, pre-COVID levels, but we're certainly working towards those levels. So that's great to hear. Thanks, guys, for the information. Next question is for Scott Raber. Scott began his real estate career in Atlanta, Georgia. He has been in Boise for the past 15 years. And he's developmental background and a successful history in leading projects in the office, retail, and industrial sectors across the country. Scott currently concentrates his effort on sales and leasing of office and industrial buildings throughout the Treasure Valley. Scott, taking into account what we just heard, both from the speakers earlier and then just now from Scott and Lou, what advice would you give to owners who have tenants whose businesses have been affected by the COVID economy? How do they navigate the current environment without jeopardizing the financial viability of their investment?
Let me take off mute there. Yeah, thanks, Oliver. And thanks to our audience. I really appreciate the opportunity to put on a tie for the first time in 7 or 8 months. So, I kind of go back to a phrase that we heard early in this pandemic. We're in this together. The virus is not predictable as to how it impacts an individual's health, but it is fairly predictable how it impacts businesses, and it is definitely playing favorites. We're seeing some companies are really struggling. Some are doing just fine. Some are booming, and there's a lot of opportunity for new companies to start up. So, my advice to the landlords out there are, it is an opportunity for you to really get to know your tenants better. If they're asking for concessions, you need to review their financials on a regular basis. You need to know that they are taking advantage of subsidies that might be available to them. And I would encourage short-term concessions, maybe 6 months at a time, because we feel pretty bullish about our market long-term. I think rental rates will continue to rise, and there will be companies that will move to Boise, and you should have the opportunity to be able to replace tenants that may be struggling.
So, taking into account your history, as having worked in various markets across the country, and I know from sitting next to you, you're constantly on the phone with brokers in other markets and clients in other markets. How would you say the Boise office market is faring comparing to the national office market throughout the pandemic, and how has our recovery been different, perhaps, than throughout the rest of the country?
Yeah, so I asked our research department to do some research on the top, I'd say, 8 or 9 markets in the country. I included Salt Lake City, Portland, and Seattle, obviously, in some of this data, just so we get more of a regional focus in here. But on average, the vacancy rates have increased 1.95% in the major markets. Boise's vacancy rate, office year over year, has actually decreased by 1.75%. So, that's significant. Absorption kind of shows the same pattern. The major markets have lost about 200% absorption year over year. So they were very positive a year ago. they're very negative now. And Boise, while not year over year increase in absorption, we're just down about 25%. So definitely signs are indicating that Boise is a receiver for a lot of the instability, and lack of desire to be in some of the more populated areas.
Thanks, Scott. I appreciate it. Just really quickly wanted to remind all the folks in attendance, we've received some great questions so far just in the past few minutes. Wanted to remind you that if you have any questions, please send those in via the chat feature. We'd love to get to those before the end of the session. Moving on, next question is for Kyle Uhlenkott. Kyle moved to Boise 8 years ago, and he joined the office brokerage team about 18 months ago. He focuses primarily on the leasing side. Kyle, he has an in-depth knowledge of helping tenants and owners navigate the pain points during these unique times. And Kyle, you spend a lot of time prospecting by reaching out to tenants. What are you hearing from those tenants as it pertains to their office space concerns? And then what advice are you giving them to help navigate those concerns?
Yeah, thanks for the question, Oliver. I really appreciate it. So like you said, I am a newer broker. I've been doing a lot of prospecting, and I would say the late part of 2019, early part of 2020, I was having lots of conversations with companies that were really just growing. They were in growth mode. They were opening up new divisions, hiring on new people, and they really just needed more office space. So I was helping them through that, and it seemed like almost overnight, people just hit the pause button. People weren't sure where the market was going. They weren't really sure what the future looked like, and so they hit pause. And now what I'm seeing is a lot of companies are excited to get back into the office. They really want to make that transition, but they don't know what it looks like. So I guess as far as advice goes, my first word of advice is to make sure that the tenant and all of their employees are safe. From there, we can move on to the next advice that I'm giving them is that we need to completely understand the situation that they're in. So a lot of times what that looks like is doing a lease abstract. So that's going through the entire lease, combing through it, and understanding when the lease actually terminates, lease extension options, and just completely understanding that. And then also talking with the company and understanding the situation that they're expecting for their future. And really from there, then we can best help them pivot.
That's great, Kyle. Thank you. Next question is for Lance Millington. Lance recently joined Colliers after a 25-year sales and marketing career with several large tech companies. He's lived in Boise since 1990 and has been involved in commercial real estate since 2008. He brings the unique perspective as a building owner and specializes in building successful tenant-landlord relationships. So Lance, as a solution to curbing the spread of COVID while still keeping their business up and running, companies have pivoted to remote working environments. They're utilizing services like Zoom to facilitate internal and external meetings. From a commercial real estate standpoint, this raises the concern among owners that companies will be utilizing less and less office space. As someone who's spent years in the tech industry, you also have extensive experience with the remote working environments. Do you feel like this is a long-term trend, and what do you believe will be the effects on the office market?
That's a really interesting question. I'll tell you that this is a long-term trend, and it's been going on for a long time. And sometimes we forget that this idea of being able to work remote isn't new. This has been happening for a long time, and really it's driven by big companies trying to figure out how to cut costs and a desire for more flexible working arrangements for their workers. So this has been going on for a long time, which is one reason why I think companies were able to pivot so quickly earlier this year to being in the office all the time to remote work. So I think that all of the technology, the collaboration tools, everything that people have invested in were really put to good use when things started changing quickly in early part of this year. As to where it goes, there are all kinds of numbers out there that would support just about any side of this discussion somebody would want to take. I read recently that 10%, that companies are saying that 10% of the people who are now working remote will continue to work remote. At the same time, over 50% of the workers are saying that they would like to work remote all the time. So there's a big disparity there, and I think a lot of these things are going to have to work themselves out. I also just read an article last week that said one of the biggest tech companies in the world has now announced that they will allow their workers to work remote. Then if you read down in the article, it says, but they have to be in the office at least 50% of the time. So while there may be a lot of flexibility on how that works, they really need to be in the office. And the reason for that, and I think everybody would agree, there's a lot of collaboration that comes from being in the office. People are really good at driving innovation when they're in the office together. We heard earlier one of our guest speakers talk about being able to get into the culture of a company and train new employees. Productivity is a big concern. So as we look at this, I think there's a lot of things that are going to work themselves out over time, but being in the office together, I think is going to be really important going forward. I was also on a call just a couple of weeks ago or several weeks ago with a large IT company or large IT section of a big company, and they were trying to figure out, what this was going to look like for them over the long haul. And we did this call via video so that I could see that everybody was still working at home. And I asked them, how's it going for you? Almost every single one of them said, this is okay, but we're better when we're together. So I think that they'll find a way to work in flexible time, but really they're best when they're sitting in a conference room, appropriately distanced, really work together on things.
That's awesome, Lance. And thank you for that kind of high level perspective of remote working and what we think that's going to mean long term. Taking into account that the office market in the Treasure Valley is predominantly comprised of tenants between, let's say, 1,000 and 5,000 square feet. How do you see the remote working trend affecting tenants of this size locally here in the Treasure Valley, both now and in the future?
Yeah, it's really interesting. If you look at where people are really wanting to try to get an office space, just look around and try to find that size of an office these days. There's not a lot. There's high demand for that. And part of the reason for that is that these are smaller companies that maybe haven't been able to invest in all of this technology to collaborate. They also understand that taking care of their customers, they're really good at it when they're together. Their customers need some attention and they're good at working together in the office. So they're trying to figure out how to get back in the office. They're very eager to make that happen. Again, appropriately distanced with the the right safety and health measures in place, but they're working very hard and very eager to get back in the office as quick as they can.
Thanks, Lance. Hey, Scott Feiner, so all this talk about technology, recognizing that your core competency, or one of them, is the medical office region. Telehealth is becoming a bigger part of the modern medical practice. Can you share briefly what telehealth is, and then give us a little rundown about its effects on the office market, both from the tenant and owner/investor perspective?
Yeah, thanks, Oliver. And I think this is a good segue from Lance's discussion. First of all, telehealth is composed of three components. These are e-consults, remote patient monitoring, and virtual visits. So that's kind of what you think of when you think of telehealth. I'm a part of the Colliers Healthcare group, which is a national group, and we share data and best practices. And one of the data points that I read recently as being a part of this group, and this was going off of what Lance is saying, is that remote working was happening even before COVID. From 2012 to 2017, there was a 1,202% increase in the telehealth visit world. Now, so this is pre-COVID. Looking since 2020 and since COVID, there will be 1 billion telehealth visits this year, which is a 4-fold increase even beyond what was going on there. So what does this mean for clients that I'm working with, both who own medical office space or who use medical office space? Well, for the users, it's how can you guys be on your game to make sure you have the best technology available? There will be people out there that will take advantage of telehealth and groups out there, and they can see more people safer, and you can reach more people. From the landlord or user side, I would say that the thing to realize is that maybe you don't have to have your traditional medical office building setting, with you being housed with a bunch of other medical office providers, large parking fields, things like that. you may be able to get away with not having such high parking ratios. Typically, we like to see 7 to 8 per 1,000 parking. So now can you as a landlord pivot and think about a different market sector as to where, maybe you can reach some of these medical tenants who seem to be really good at good long-term tenants.
That's interesting. Thank you, Scott. Appreciate that rundown both on telehealth and how it's going to affect folks in this market. Sounds like there's some opportunities that could be coming that. So we'll definitely keep an eye on it. So while we've been talking, we've got a couple questions that have come in. And so guys, I'm just going to throw them out to you. I think this one, Scott, based on what we talked about earlier, Scott Raber, we'll throw this one to you. How has the turmoil in Seattle and other cities impacted the Treasure Valley commercial real estate landscape, particularly as it pertains to office?
Oh, I think we've heard a lot of this already today, so don't want to be too repetitive, but there's no doubt we're seeing lots of, more companies than usual who call us and say, I'm moving a company. We haven't heard the big companies yet, but I think that's really on the horizon. I mean, with Amazon committing to an 800,000 square foot distribution center, a 300,000 square foot industrial building, and now a 90,000 square foot office building, it's just a matter of time before others follow suit. Kind of along those same lines, our team here probably fields a call a week from developers from out of state that say, they're patient, they're long-term, they saw what happened in Dallas or Denver or Austin, and they don't want to miss the boat in Boise. So they come visit and really want to get a toehold in our market. But it's a tough market to enter right now. But lots of eyes across the country are on Boise.
Awesome. Thanks, Scott. Well done. Okay, let's Lou Manglos. I think this is a good one for you. Are there any signs that construction costs will start coming down to allow for further development without a massive spike in rents? What do you think, Lou?
Yeah, I'm not seeing any signs at all that construction costs are likely to come down. The developers who we've spoken with since COVID have said, kind of surprisingly, construction costs have gone up since COVID hit. And some of that is a function of labor. Some of it is a function of materials costs. Lumber, as an example, is up dramatically, partly due to fires, partly due to the demand on the home building side, but really have not seen any evidence to support the idea that construction costs might come down.
Great, thanks, Lou. So we've got two more, and I think they're pretty related, so I'm going to lump them in. And Scott Feiner, I'm going to pick on you with this one. Will growth in Idaho be enough to fill office vacancies created by COVID? And will new office developments in downtown Boise be put on hold? The second part of the question is, how do you think Boise will respond to the massive increase of inventory in the downtown area? So maybe first address the use of the word massive increase in inventory in the downtown area, and then you can move on to answering the question.
Yeah, I think what that question was getting at, and a lot that you read in the news is that, CenturyLink, one of our largest tenants downtown, 120,000 square feet, is saying they're not coming back to the office. Well, just to be clear that, we do not know what their plans are. We're monitoring the situation. It might be the case that they're just putting things on hold and they eventually might bring people back to the office. Who knows? So when you talk about a massive exodus or a massive hole in our market, I think Stieg really hit it on the head with when we look nationally on kind of where vacancies are typically at in the office sector, it's above 10% or just right around there, and I know that and right now we're closer to 5% in our market. So the idea that people are not coming back to work, for my landlord clients, it's of course concerning that that vacancies are going up, and we might see more subleases come out, and we are seeing that. But because we're at 5%, we're really not at an unhealthy level. Again, our landlord clients don't want to hear that, but it's a double-edged sword in that, if we have more vacancy, we will see more inquiries and more companies that have the ability to move here. And, with Lou saying that construction costs are going up, having that existing vacancy and inventory is going to be a positive thing for our economy, as a whole. Now, it might not feel good for the pocketbooks of our current landlords as vacancy increases, but there is a lot of opportunity. And with the growth that you've heard about, people wanting to be in Idaho, we feel that these spaces will be backfilled, probably get back to our normal 5% vacancies, but expect that to increase in the short term. And then with new growth, again, we are going to continue to see people try to develop office space as bodies enter this market, as larger companies look to Boise. Our rental rates, regionally and nationally, are still, on the lower side of things. So Boise is poised to be in a very good position moving forward.
And I think it's interesting. We get, companies are inquiring all the time about downtown product. And let's say they need, 60,000 square feet of contiguous space. And they're going through a group like the Boise Valley Economic Partnership. And they're trying to put together options in downtown Boise for them to find space. Well, we haven't had it.
Yeah.
So to piggyback on what Scott Raber was saying earlier about companies coming from the coast, they might need that much space. And the opportunity for things to open up a little bit, I think if there is a massive increase, I think that just provides opportunities to a lot of the local owners.
Yeah, absolutely. And it provides for those looking to build as well. If it's not there and someone was willing to build it, we will. And so, yeah, great opportunity to capture some of the larger users.
Well, guys, I want to throw this last question to Lou Manglos. Okay, Lou, time to take out your crystal ball. Focusing specifically on the investment side, you've been in the industry for a long time. You've seen the peaks and the valleys and everything in between. Drawing upon that experience, what do you see happening in the office market in 2021? Again, focusing, primarily on the investment side.
Yeah, thanks, Oliver. So the fundamentals of our market are really strong. We've talked about the low vacancy rate, the population growth that we've had. And this is going to continue to attract investment capital to our market. I would say certainly the number of investors that are out there nationally and looking at our market currently with active requirements, it's below where it was pre-COVID, certainly, but there's still very strong demand for quality product. And we have a very limited supply, just given the size of our market. Another thing that we're seeing, and I think I mentioned it earlier, is financing availability has gotten better. Financing terms have gotten better over the last few months. So just all things considered, I'm very optimistic about our market moving forward.
Well, that's good to hear. I think, the panel probably shares your optimism. I'm certainly bullish on 2021 in the Boise office market, the Treasure Valley as a whole. Guys, I want to take some time to thank our guests for attending today. We hope you found our time together both informative and valuable. Thanks again to Gibbons Pursley for your support during this Outlook conference. And lastly, thanks to the panel for your time and expertise. Really appreciate it. To everybody out there and to you, my friends, have a great end to your 2020. Let's look forward to finishing up strong and then a great 2021. Thank you very much.